People want to know about Profit First.
Yeah. Profit First was one of the first books that I picked up, and I read it.
I could have got more toothpaste out of that thing.
Yeah.
You will find a way to stretch it and make it work. There are some times that you have to swallow your pride to stay disciplined to this type of a process. Do not go and pull money out of that owner's account. And I'm going to give you an example. This is so much fun.
Yeah.
I'm so glad we're back here again. You know, I never would have realized how much I would look forward to like just sitting here and having these conversations and all that. So, you know, welcome back to the 3PX show. And thank you for those of you that have been watching, those of you that have been listening. Man, the feedback, the comments and, you know, text messages directly to us and engaging with us on our social platforms, the DMs, you know, that we get. It's been awesome. It's so motivating, dude.
Oh my God. I never would have believed, but you know, it's more than just Stephanie and Landy at this point. So that's great. So thank y'all for giving us the support. But it has been great. It's been fun. But I mean, even if we didn't have 2 followers, our wives, and hopefully they listen to it and they follow us and stuff, but it's still fun anyway, because we're having a great conversation. We feed off each other so well. That's what makes it fun. I mean, because it's, we're hitting topics that we enjoy and that we want to talk about, which just makes it it just helps us.
Yep. So you found the 3PX show, and if this is your first time, thank you. If you're here again, welcome back. We're talking people, profit, process, and everything in between. And this topic right here has been, now we're not getting like thousands of messages. I'm not trying to be fake here, but this topic has been the most requested. People want to know about Profit First.
Yeah.
They want to know what's the difference? Why did that mean so much to your business? How did that change your trajectory? And, you know, this is going to be an impactful episode, I think, for people that, whether you're running a business or owning a business, because I shared with you earlier, I spent years operating a business, running stores or a region or division, just operating a business. And I lived and died off of an accrual P&L. I didn't really understand cash flow, you know, and we'll talk about some examples there. But working with you now these last few years, since you've been running hard on Profit First, you've scaled it to other people now. You've got me the experience and exposure to it. I've learned so much, because now I am thinking about our business through not just, hey, what does the P&L look like? The profit and loss statement at the end of the month look like? How much cash are we putting in the bank?
Right.
How much cash is going into the profit account? How much cash is going into the giving account? How much cash is going into your owner's comp account? Because a lot of owners pay themselves last.
Yeah.
Right. So it's a long journey, and you've been doing it now for a long time, but you had to start somewhere. So really the first question I want to ask is, how did you stumble across Profit First?
I needed to learn how to manage my own money anyway, for the business. And because it was tough, you know, back in 2019, 2020, when COVID hit, we had a lot of revenue, a lot of sales, but we lost money one of the years. And we're trying to find answers of what we needed to do. And I started reading more than anything, and Profit First was one of the first books that I picked up. I remember going on vacation with Stephanie and I during COVID. We went to some island or something just to get away, to clear our brains and stuff. And I took the book with me and I read it, and I just started talking to her, because she's the one that reminded me the other day about it, and says, you know, that was the book that you read while we were on vacation. And it was, you know, we just got in it, and it was just, feel like we were really secluded, but we had a chance I had a chance to dig into the book and highlight it and just talk and think about it. And I said, you know what, I'm going to implement this when I get back. And when I got back, because it just resonated with me, I understood it instantly, of how they did the bank accounts. You know, because most people with bank accounts, or most people with businesses, just start with one bank account. Nobody ever tells you how to manage your business. Yeah. You know, you can go to class or go to school, and, you know, you can go through accounting and do all that. And the big thing that it says in there is sales, which is your total revenue, what you sell to people, minus expenses equals your profit.
That's what we do.
That's what you're taught.
That's exactly what I was taught. That's the way I operated for years. Sales minus expenses equals profit.
And the way Profit First teaches you is sales minus profit equals expenses. Because if you don't pay yourself first, you'll never pay yourself. And there's so many business owners. I was one of them. There's so many business owners that will go without getting paid a lot of times, or getting paid peanuts compared to what they have to pay their employees. Because when you have a business and things get tight, if you don't take care of your people, they'll leave. If you don't take care of yourself, well, then you're going to be there and just grind through it. That's probably part of the burnout too, because if you don't make money, it just gets old after a while. And being in business for 10, 11 years at that point, it was just getting old. It was getting frustrating. There were times that I didn't pay myself. I went months or 2 months without paying myself a paycheck during those early lean years. And even when COVID hit, and the PPP came out for most businesses, small businesses and big businesses, we took it just like everybody else did. And but that was a hard feeling. But before that happened, I remember when it hit, we had to make some decisions. Had to cut expenses, had to do some things to really do it. And so we told our people, hey, instead of working 40 hours, we're going to work 30 hours, because we tried to keep everybody on board. Salaried people took a 25% pay cut. And I told everybody, and I told my wife, that, hey, we're gonna go without a paycheck until we get back up and going. So there was about a 2 to 3 month period before we were funded with the PPP that we went without getting a paycheck. And so you had to be prepared for those kind of things. And we had some savings, which was great, but you can burn through that kind of stuff really quick. And if you don't have that, then you get in really big trouble. And so when we implemented this, and the way it was is, like I said earlier, most small businesses, and we were the same, you have one account. All your money goes in that account, and all your money goes out of that account. And there's absolutely no clarity whatsoever at all. I mean, it's just money in, money out. And when you start looking for something, especially when you have quite a bit of revenue, you just don't know where anything is. You might have a little bit of money going over to your savings account, but then when something gets tight, you pull that right back out. And Profit First teaches you that whole process a whole lot different than the way what we're used to doing. So it's been a game changer for our business and what we do.
How are you even able to understand where the money is going when, a lot of businesses, you might be doing $1 million a year and, or several $1 million a year, but even at the $1 million a year level, how do you track where your money is going if it's all coming out of one account?
You don't?
You get lost in transactions.
And you get lost in transactions. You get lost with a lot of just small, repetitive little occurrences that come out. And you can be a $1 million business and run very efficiently and make a ton of money, or you could be $1 million business and lose money, right? So it doesn't matter the size. You can be 20, 40, $50 million as well, or bigger, and you can still lose money if you don't live within your means. If you're not making money, it doesn't matter how it is. You just have bigger issues the bigger you get. And so we were starting to get decent size, and we just started having bigger issues, and because we couldn't see anything. And bringing Profit First into it, going through, if you go through and you read the book and you see how they lay out the accounts, we went. I went 100% in when I read it. I thought, okay, I'm already doing a little bit of it, but this showed me how to close the loop the way I feel like it. It really made it to where, hey, all your money goes in one account. And just to explain a little bit about Profit First, and the banking side of it, there's a whole lot more to it, and we'll get into it. But the Profit First, the banking side, it teaches you to instead of having one main account, it teaches you where you start off with probably 5. And if you know us, all of our businesses have at least 10 accounts probably in them, because we really have, and I call each account like a bucket, but we have our buckets where we put them in there. But the way it does is all your money goes into your income account. That's your main revenue account. So for a 2-week period, we do ours every other Friday. The way Profit First suggests is do it on the 10th and the 25th, but you can do it what scales and works for you. So we do every other Friday. But all of our money goes into the income account, and it sits there and builds up however much it's going to build up for a 2-week period. And then when it gets to that following Friday, and it's our Profit First day, as we call it, we take that money in the income account and we drain it to zero, and we put it into the other buckets, into the other bank accounts. And so our other bank accounts would be our payables account that we're going to pay our major vendors with. It's going to be our OPEX account. That would be like payroll, insurance, things like that. It'll be our profit account. So that way we know we're putting money aside for future growth and how to pay out different things. It's going to be our tax account, because if you're making money, you're going to pay taxes. And so the worst thing you can do is get into a situation where you're tax time comes and you have no money, I can talk about that a little bit later too. A sales tax account, owner's comp account, because if you don't pay yourself, and you're not intentional about it, then it just makes it hard to pay yourself. And so what it does is Profit First just gives you that you're very intentional with every single dollar. You know where everything is. You look at it all, and you have to go through and do an assessment on your business to see, okay, what are your expenses? How much are they? How much is your as an owner? What's your payroll? What do you make as an owner? Your car insurance, if you have a personal car, if you're running your personal expenses through it, that's all part of your owner's comp, even your personal insurance, just everything about it. And so you get those numbers, and you write them down, and how much you're paying your vendors, you're going to write all that down. And then all of a sudden you look at it and you know what your top line sales are, say for that year or for a quarter, and preferably to do it over a year. And it gives you a percentage, because you're going to see those dollar amounts below it. And then it's going to give you maybe your net income if you have any. If it's a net loss, then it's there as well. But it tells you, hey, this is what percentage of your total revenue. Like if your materials, if it's 50%, then that's 50%. If it's OpEx and your payroll is 15%, then that's 15%, right? And those kind of things. And so you're percentage wise and putting it in there. And that's how you base it off the very first one. But every 2 weeks, you take that money and you put it into those buckets, and they take care of it throughout the course of the year. And so you're intentional with putting money into profit. You're intentional with putting money into tax and also in the owner's comp. And so it just makes it to where you understand where every dollar's going. And then it just gives you that clarity. But not only that, you start attacking, say, your OpEx, or you start attacking different ones to see, okay, let's look at our bank statements, and let's just go through those and start highlighting them and highlighting expenses that are recurring. Do we really need that? Hey, is this, can we get rid of this? Can we get rid of that? Can we do this? Can we do that? And then as an owner, how much, do you need to put in there? And the good thing about Profit First, it gives you a sheet out there, just like a little spreadsheet that tells you what category you're in. So if you're a $0 to $250,000 business, or if you're $1 million to a $5 million business, or say a $5 million to a 10, just whatever category you're in, makes it very simple. It tells you the expenses that you should be putting in those accounts. And so then you compare it. So here's where you are today, and then here's where you should be, and you just work your way to it. You don't try to make those changes instantly. What I tell people that I've helped over the past, smaller companies around that I've helped and coached, is you start off small, and it'll probably take you about 6 quarters, so about a year and a half, to implement the whole Profit First system. To where because if you're not putting any in profit, you can't go from profit from 0 to say 15% just tomorrow, because you don't have the money. And what it's going to do is also going to tell you, are you priced right in your business? But you start. And sometimes you can raise your prices and sometimes you can't. And if you can't, then you got to cut expenses. And so you got to just really evaluate your entire business. It brings clarity to every aspect of your business, and it helps you just grow. And each quarter you may raise that percentage up a little bit more, and make sure you raise up taxes too, because when it comes tax time, you got to pay those taxes. Uncle Sam wants his money, and you got to make sure that you have it. And I've been there before when tax time came, and I remember one of the things that really got me was Steffi and I, we were about to go on vacation, and it was I guess it must have been April 16th that we were going to leave, and this was April 15th. And my CPA at the time sent over and said, "Hey, you owe $120,000," and I'm going on vacation the next day. You talking about hitting you in the stomach? And I started looking, and I could pull a lot of my accounts together and cash some things in, and and pay my taxes, which is what I had to do at the time, because I didn't have a choice. But I also went through and started asking questions. And before that night was out, I had gotten the taxes from 120 down to 80, just because I asked questions. Hey, did we put this in there? And so I didn't handle it right. So you got to really make sure you handle that part too. But regardless, I didn't have that taxes really set aside for taxes. Now, it's good that I had the money at the time, but there's so many businesses out there that don't think about that part, and just out of sight, out of mind. And this right here puts it in there, so when you do pay taxes and it comes time, the money's over there, and it's not a big deal. At that point, you just pay it and move on.
You said a lot. You said a lot in that, and I want to call out a couple things. No, it was great. I just want to call out a couple things because it's important. I want to make sure people really they really get their arms around what you're saying. And that first thing is there's multiple accounts.
Yep.
All the revenue is coming into the income account. That represents 100% of your cash coming in. Then you're distributing 100% of that cash into other buckets.
Yes. Every 2 weeks.
And
Yep.
what you are prioritizing is you are prioritizing the first thing that you do. And we mentioned this in our first episode, but we have a giving account, and that's the first place that we move money to. So please don't misunderstand when I say profit first. We prioritize giving, but the first account you're moving money into is your profit account. And you also said something in our first episode. You said you may have to start with 1%.
Yeah.
But you're building the discipline of prioritizing profit.
Yeah.
And saving for the future and protecting your business and all that. So you might just move 1%. That means you have 99% left to manage your business. 50% might go to OpEx. 20% might go to payables. 15% might go to tax. And then, 6% goes to sales tax and all these things. But you're distributing all of that. Then when you see that there are some buckets that are negative, when you pay the bills, then it zeroes you in. This is where I need to focus.
Yeah.
I'm overfunding my payables account. I'm underfunding my OpEx account. You can adjust. Or they're both funded properly, but this one is constantly under. I'm running my business with too much expense for what I am generating cash for that bucket, and I need to right size my business.
Yeah, exactly.
It's that clarity that it gives you. But that didn't come overnight.
No, it opens your eyes big time for that.
And you mentioned it really takes you about 6 full quarters.
Mm-hmm.
So you start with a little bit here, spread the buckets out, and then you watch it. Talk about that process of committing to profit first. When you see that there's some accounts that go negative, like I think we talked about earlier, and it was, when you call me in your office and you're like, dude, I just had to fund like $250,000 out of the profit account to fund this other bucket. Like, I better not have to ever do that again. Yeah. Kind of thing, right? You didn't abandon ship. Profit first doesn't work. This isn't the right thing for us. Just talk about the focus it took to get everything just right to where you finally are at today.
Yeah. So, and I'm glad you brought that up because the whole thing about the profit first, and when you first started, you don't go 0 to 60 overnight, as far as how fast you're going to do it. You take your time and you go slower. So the whole rule of thumb is if you can live on 100%, you can live on 99. That's why we say just put 1% over there, because 1% is better than no percent. And it may be small, but that's how you try to teach your kids, in a sense. If you have young kids, you want them to start saving and start doing, well, you just put smaller amounts in there. It may not look like it's adding up, but over time it adds up to be really nice. And in the business, that 1% sometimes can be a nice chunk of change for you over a period of time. And so it's just making sure that you can manage that. But, when we first started Profit First, one of the things that we really looked at was, we got our percentages, and we funded each one of the accounts, so each one of the buckets. And, for the next 2 weeks, we ran out of those accounts. And like you said, we had at times that it was going to go negative. And so we had to move, and it may be moving from OpEx account to that account. Or what I always tried to do was not take any more money out of the income account throughout the course of those 2 weeks and move over to one of them, because that kind of messes up my next cycle. And so my thing is, okay, where can I find it anywhere else? I don't want to touch tax, and I don't want to touch profit, because those are two. And just like it says in Profit First, is you want to fund those and then move them to a different bank where it makes it harder to touch. I've always, if you are bad at saving, you put it, I've always taught my kids, if you're bad at saving, because I was, you put your savings account in a different bank. Don't get a debit card. Don't get checks. The only time you can get it is if you drive about an hour. No online banking. And it's just a pain to go get. And it's hard. It's not a Friday night. It's like, oh, I need to get some extra money out. And you're over there. It's like, well, I got $500 over there, but you can't touch it. You can touch it Monday if you drive 45 minutes to go to the bank and get it. And then by Monday, well, that whole, whatever you needed for the weekend, well, the weekend's already gone and it's done. And then it's no big deal and you don't need it. And so it's just building that discipline within your how you manage your money and how you do it. And so, you try to move those out of the way. And then you try to leave your income alone if you can. Now, the first few cycles, when you're first starting it out, you might have to bring a little bit of income over because you still got to survive. But instead of, maybe you take 25% out and of your income, maybe throughout that second week or something, because you got to make sure, because all the buckets are running tight and running thin and you're nervous. Okay, no problem, do that. And then the next time it comes around, instead of 25, make it 15 and just narrow it down. And so over the course of a few cycles of going through it, now you're in a sense fully funded on those and you feel confident that you can make it. It does teach you to where you're going to change, you don't have to live 100%. You're the one that made the percentages. Now just start tweaking the percentages that fit how it does. And so that then it settles itself down. And it really settles it down a lot because instead of all the money kind of coming and going crazy out of these banks, you have fewer transactions in each one of those accounts. So you can see exactly what's happening in those accounts. So if you see your payables going to your vendors, then, however many checks that you write to vendors, that's all that's in that account. Man, that makes it so easy to see. If you see some kind of a transaction that's $49.99 for a car wash, well, that's not supposed to be in that account. Mm-hmm. And you pull it out of the account and you put it in the other account, or you try to get rid of it. But then you go to your OPEX account and you have your payroll, you have your insurance, and then you have, and usually what I do too, this is probably the best rule of thumb I would say, is let your OPEX account be the one that you had at the beginning that was just a messy account. Now that's all in and all out. You go to the bank and you move your account over and you let your income account be a brand new account. You let your payables be a brand new account, but you let your OPEX be kind of that messy. And then as you start to move buckets, you're starting to see, okay, there's that one account and here it is. Boom, there's a $39.99 charge. Well, man, I got 3 of them this month. Well, what are they? And then you just start drilling into them. And you go through your bank statements, but you'll start seeing that, your profit, there shouldn't be hardly any transactions at all on it. Taxes, there shouldn't be any transactions except when it's time to pay taxes. All these different things. And like you said earlier, we prioritize giving. We like to give back to our community. When we set the company up, I said in the first one, we give back. God has just blessed us and continue to do that. And so we prioritize our giving as a count. So we've got a bucket specifically for that. And so, but everybody teach their own how they build their business and how they do it. There may be accounts that you need specifically for it is. We're going through a big project right now, and we got a project account,
big
right?
Bang.
The big bang account.
Big bang.
And it's going to be a big bang. It is. And so, but we have an account for that. That way it's fully funded. And we know that as we're going through the next year, that it's not going to hurt us because we've already got that in there and we've accounted for that throughout our cash flow. And so it just brings clarity to every episode or every section of how you manage your money, but it helps you with your P&Ls. It helps you with your balance sheet. It actually helps you with your operations because when you know where your money is, you kind of know where everything starts falling into place a little bit better.
So there were 2 things that came to my mind when you were talking about that. That's why I had to make notes. So you'll appreciate this. 2 days ago, I'm using the toothpaste, and this is an example that in the Profit First video.
Yep.
So 2 days ago, I'm using the toothpaste, and I'm running that thing down, dude. I mean, I got it rolled up. I'm like squeezing my thumb to get more toothpaste out of there. Landy comes over. God help me, she's about to watch this and get so mad. Landy comes over, and she takes this brand new tube of toothpaste and drops it in the drawer, and she takes my rolled up toothpaste and throws it in the trash. And immediately I thought, I could have got more toothpaste out of that thing.
Yeah.
I could get more out of that. That is the Profit First mentality, because if you are only left with this much and that's what you have to run your business on, you will find a way to stretch it and make it work. But when you're just fishing from the big income bucket, that one account, like you talked about, it's easy to just keep pulling, and you're less disciplined. So roll that toothpaste up, squeeze
she just
that
did
thing out.
She probably threw 2% of toothpaste away.
Did you hear that?
She probably, I mean, but that's what businesses do, right?
That's a
exactly
business
what
owner's entire profit when they first start this is you just threw away their entire toothpaste profit.
But think about that. If you do that every couple of months,
She's
you get a
gonna
new
kill you,
toothpaste thing. She's going to kill you. I can just speak to it now freely because you're the one that said it. It's your toothpaste, not mine. But that's what a business owner does, right?
I'm still mad about it.
They throw that away.
Yes.
And I've rolled it up for years because you get the most out of it. Dude, when you can't afford to buy, I mean, toothpaste, can be expensive. All the different things can be expensive that we use. And in the business, it can get really expensive. And so if you don't watch and maintain and it just all goes in and out, well, everybody else is just, oh, well, that one's almost done. So let's go get this.
Mhm.
And your employees think the same way. The people that work for you that do it, if they see you doing it, they're going to do the same thing. And it's easy to throw stuff away or get a new, get a new pair of gloves. Well, what's wrong with the old pair? I left them in my car and then everybody's got 10 pair of gloves, or 10 pair of safety glasses or 10 pair of whatever it is. And so then you got to start really, okay, how do I ration this out or do I keep PPE? Well, it's very important for us to keep that. And so so those are little examples, right? But those are things that you can just throw away and get rid of. It's only $5. Who cares about $5? Well, but when you have 150 people working for you, $5 means a lot if everybody's just kind of doing that same mentality. So I'm not saying I have to, take your paper and flip it over and use the backside. We're not at that point anymore, but brother, I've been there and I've used the backside of that paper.
Yeah.
But it makes it hard to read sometimes too. But, it's that mentality running across the board with everybody in the company.
And there are some times that you have to swallow your pride to stay disciplined to this type of a process.
Yeah.
And not go and pull money out of that profit account. Do not go and pull money out of that owner's account. And I'm going to give you an example. Someone listen to this. You are going to implement profit first. And you are going to fund your payables account. You're going to fund your OPEX account, and there's not going to be enough money.
Yeah.
And then you're going to have to make a decision. What do I do? Do I pull money out of profit? Do I pull money out of tax? Do I pull money out of, sales tax and fund these? Or do I have to get creative and make hard decisions to right size these buckets? And I'm going to give you an example. You may have to pick up the phone and call a vendor and say, hey, I know I've been paying you on net 15 and I've been getting a 1% discount. Can I pay you on net 30? Can I pay you on net 45? Can I pay you on net 60?
Yeah.
You may have to float some cash to buy yourself a little bit of time, tweak your percentages. Okay. So maybe you do have to tweak that payables percentage, but what you are forcing yourself to not do is go into that profit account and pull money and transfer it to cover expenses. You are managing your business. You're right sizing your accounts. You're making hard decisions. And then that might give you 30 days to figure out either I need to generate more revenue. I need to see where I can reduce some OPEX expense. I need to buy a little better.
Yeah.
Maybe you're calling. How many times have you done this? We just went through some vendor negotiations, and God bless all of our vendors and suppliers. We have some fantastic partners.
We do.
But you may have to go through, some different vendor interviews and negotiating. And can you find better cost? Sometimes getting on Amazon and ordering is not always the cheapest way to do things.
Very rarely.
It's the easiest.
Yeah.
But there are things you can do to get creative to manage those accounts down to where when you fund them, there is enough toothpaste left in the toothpaste thing so that you can brush your teeth for another couple of weeks.
Yeah.
You don't have to just go buy another tube of toothpaste, babe,
Yeah.
and throw the other one away.
Yeah, you made a great point there when you started talking about terms and stuff, because terms is a big one. Because we went for so long paying in probably 35, 40, 50 days and did that. And Profit First, started putting money in the bucket of our payables account and things of that nature. And so as we started filling that, we were able to start pulling, payments ahead and started taking discounts.
Early pay discounts.
And so it made a huge difference. And then, one of our second companies that we have, we tried to just implement that right off the bat. And as soon as we did, within a matter of one or two cycles, I went to Angela, our VP of finance at the time, and talked to her and said, "Hey, we may have to stop this because really what it was doing is just taking all of our cash and paying to get maybe a 1.5 to 2% discount. And don't get me wrong, I want that discount all that I can get because it's very important. It helps with a little bit of margins. But if you take all your money and send it, you can become very cash broke too. And it's hard to get that cycle going. And so we stopped it for a while and we started putting a little extra and say, if your payables account was, ours was maybe say 50%. And so we started putting 52% in there or 53, whatever it was, maybe 5% extra. It wasn't a huge hit, but we did that for a few months to build it up enough to where we could come back and start taking it. And then it fell into the right place to where you're still putting plenty of money in your profit and plenty of money into your tax. Because at the end of the day, those are the two main ones that you got to make sure you take care of.
We said on the a couple episodes ago, I think it was the first episode, I said, don't mistake financial success for peace of mind.
Yeah.
Financial clarity is what brings peace of mind. There's a lot of people who are financially successful and they don't know whether they're coming or going and they don't have peace of mind. Well, the other thing that financial clarity does for you is it brings predictability.
Yes.
And what you have done, because now you've been doing it for so long and you've trained others, and now we have multiple people inside of our businesses who are Profit First certified and who are operating this on our company's behalf. But what you're able to do is you are able to now predict cash flows, not just over a 2-week period, a 1-month period, a quarter, but over an entire year, because now we've been doing it for several years and you've got the seasonality of your cash flows. So you can predict your cash flows. You can predict your OpEx expenses, your payables expenses. Now we're predicting when we want to make investments in the business, when we want to buy that new machine, because we'll know we have the money saved for it. And you have actually tied your Profit First cash flow predictions directly to our budget.
Yes.
Which links then to our P&L, our balance sheet. And all of these things are now working together.
Yep.
That is where you as an owner have peace of mind, because you're not just seeing it, but you know what it's going to look like next week, in 2 weeks, in a quarter, in a year.
How many times do you think especially a small business owner? Yeah, dude, we did this for years, where you build a budget at the end of the year for the next year, and you think, "Oh, I got this budget done." You spent a lot of time building a budget, and as soon as you get it built, it just, well, there it is. I built the budget, and you don't even go back and look at it, or you look back at it 6 months ago. It's like, why did I even spend all that time building it? But it's good to have. You need to have a budget that you built to see, okay, here's where I think I'm going this next year. And just like you said, I implemented it in with our Profit First. I built spreadsheets out and really just have it to where it works well, but it gives you such great clarity to where every 2 weeks you're seeing, okay, this is what money we received. Here's what we budgeted to receive based off of our budget that we have that we made for the operations of the business. And here's what profit should be. But I can see on our budget to the end of the year and tell you, hey, if we do if this is our budget for sales, if we do this amount of sales, this is the amount of cash that will probably come in to do that amount of sales. And so by having that, it just tells you each quarter where your profit account's going to be. It's where you know exactly where it is. It tells you also each quarter, because really when you start doing it, when you're paying taxes with the corporation, you usually have to pay quarterly taxes. And so you can see in there, well, the CPA told me this is what my quarterly taxes are. Do I have it? Well, yeah, I do. And if you don't, you can make that adjustment at the beginning of the quarter and say, hey, I've got to adjust it up, or I can adjust that down a little bit, because I know where my taxes are now for the rest of this year, basically, because I'm going to do my quarterlies. And now you're set. You know exactly where you are. You know what you can invest in. You know how much money you're going to have in your profit account. And the beautiful thing about your profit account too is at the end of each quarter, what they say is, keep at least 50% in there for growth, and then take the other 50% and either pay down debt or pay yourself a bonus kind of thing. And so, and what we do is we do all three, and we pay ourselves a little bit out of that as well. To where, hey, you can go take a vacation, you can go do different things, and actually start enjoying life. I mean, because it's so much fun when you start making money week after week, month after month, and you start seeing the sales. you look back and like, how did I ever operate the way I did when I was, when I didn't have any clarity? And now we've got super, super clarity. It just makes all the difference in the world.
Yeah. And I gotta let everybody know that we're not perfect.
No,
Okay.
by all means.
So I'm going to call us out on now. Granted, a couple of our businesses for the first quarter of 2025 exceeded targets, did great, blew it out of the water. But I will tell you that one of our businesses missed target, and in spite of still having year-over-year growth that was close to double digits, and everybody did a great job. I'll take ownership for the bad budget, but Wayne set a cash targets and profit first targets based on our expected income, our sales trajectory, all that kind of stuff. But this is so even in the failure of we did not achieve targets, this is where profit first was so powerful for us. And this is what this is why I want to end with this statement. Even though we missed our cash goal for the first quarter, we generated more cash than what we had budgeted, and we generated more profit
We did.
than what we had budgeted. And the reason why we were able to do that is because Wayne and Angela and our team are watching the cash in and the cash out every 2 weeks. And we had hires, quite frankly, we were planning on hiring some new positions and making some investments. And we were able to quickly pivot and not do those things. So we were able to still deliver on our, generating the final cash in our profit account and delivering the budget so that we were able to still pay bonuses. We exceeded our profit target. So our team members got the full profit bonus, but it was because profit first is such a great leading indicator. It helps you inform decisions about your business early on so that you don't get caught making a bad decision and not having the money pay for it. So
we talked about this.
First gave us a great first quarter for that reason.
Exactly. We talked about this several times. And just to throw this in real quick is, it's not about the top line revenue as much as it is about how much you actually put in the bank and keep, because you can have a great top line and not make any money. You can have a great top line and show that you made money, but if you spend it on other things, you can be broke and show profit. So it's about how much you're able to put over into your profit account and keep. That's what it's all about.
Yep. And listen, if you enjoy this episode, feel free to engage with us on our social media. Engage with us on our personal accounts, on the 3PX account. Share this episode with any business owner or leader that you think could gain some value from the profit first mentality. Wayne does a great job leading this initiative for us, and he has coached multiple business owners, multiple companies on implementing this profit first. We hope that you enjoyed this, and profit first works for us. There may be a lot of other things that change, but one thing's for sure is we will not abandon the way that we execute profit first, because it has helped us in all of our businesses when we were small, medium. If you're a large business, this is just the way, a different way of approaching your cash and prioritizing your profits. So we appreciate you. Thank you for listening. You've hopefully you enjoyed the 3PX show, and we will talk to you next time.
Sounds great. Thanks.
See ya.
See ya.